morning, good afternoon, good evening. It's yours truly, Padias Grove, and on behalf of Andrew Ibrahim and myself, we are Signature FX. Thank you for watching episode 7, which is a technical analysis of the euro dollar. This is a follow-up video to our previous euro dollar video, which was recorded on December 2nd, which was episode 5. And if you haven't watched it, I highly recommend you check out that euro dollar analysis, which gets us to where we are today on December 11th for this episode 7. Let's kick it off with a quote. And the quote for episode 7 goes like this: "Good traders are patient and willing to keep their cards close to their chest for extended periods of time, until the right time comes to get aggressive." And that quote is by Mark Minervini. And the best part of that quote for me is being patient for extended periods of time and then knowing when to be aggressive, knowing when the time is right to become aggressive. And that quote pretty much sums up this position here. We were long-minded on the euro dollar back on December 2nd in episode 5, and we said, look, we're gonna place our buy limit because we saw that, you know, the 1.1822 level was holding up as a fairly strong support level. So this would have been December 2nd was a weekend. We said let's place our buy limit of 1% volume of our account at 1.1822 and our stop loss at 1.1540. And this is what happened. Markets opened on Monday, got a drop down, and then didn't test our buy limit until December 5th when we got an entrance at 1.1822. We were in the market for 1% of our account. Then what happened is we got a little bit of a rise through, so we were in profit for a very short period of time, and then ever since then it's been fairly bearish, which is not necessarily a bad sign. Friday we got the non-farm payrolls out of the US, which gave us a nice little up rally. Today looking more like trying to figure out what the move's going to be for the week. And talking about the week, let's have a quick look at what we create each week with Signature FX. This is our major global events calendar, and this is for this week. So Wednesday, we got some important news coming out of the Fed at 2 p.m. Eastern Time, where the Federal Reserve announces their interest rate. And then on Thursday, we have the ECB interest rate announcement and deposit rate at 7:45 in the morning, and then the ECB press conference with none other than Mr. Mario Draghi. All right, so we're going to be watching these. These two are really going to provide us with a lot of liquidity, and these two are the main reason why we're looking to enter in another 1%. Now, the question is, where do we enter in our 1%? Let's go out a bit and let's have a quick look again at the macro high level. So as you can see from pretty much last year, December, we were down here in the very low 104s, 103s. Now we're back up higher to this 23.6 Fibonacci level. 1.1822 is the region that we're at now. So we're looking to buy in again. What happened after our video in episode 5 was we got our video was right here, actually in between here. We recorded our video and we said we wanted to buy 1% at 1.1822, which we have done. We got a nice push lower, and now we're looking like we're going back higher. So right now we're in a slight loss. We bought at 1.1822. Current price is 1.1796 right now. So if we go to the 4-hour or H4, we want to get in as low as possible. And in order to do that, actually, let's just show you really quickly where our stop loss is. Our stop loss is here at 1.1540. Okay, so we got a lot of breathing room. We're only in 1%, and we're just slightly down on our position at the moment. So we want to enter in because of that fundamental news that's coming out on Wednesday and Thursday. We're gonna start to place a buy order if we get back down to these lows here, If we test these lows again, we're going to want to buy another 1%. Okay, let's place our buy order. Okay, so before we place the buy order, we want to know exactly what the lows were on December 8th, and on that low move, the lows were 1.1730. So we're going to place our buy order just below that at 1.1725. Okay, 1.1725. The reason being, right now, what's happening as the price is kind of moving back up, there are going to be a lot of latecomers who are buying. As you can look over here on the ticker, we're getting quite a bit of buying interest on euro dollar for this Monday, December 11th. So the buyers are going to place stop losses. And where are they going to place their stop losses? Well, they're going to place their stop losses near the lows, the previous lows of structure. So their stop losses are going to probably be placed around this region here. And this region is where their stop losses are actually essentially going to be sell orders to get out at a loss. Now, what we'd like to do is take advantage of or enter in when the price drops during that liquidity event on Wednesday and or Thursday. And we want to look to enter in 1% at 1.1725. All right, so we're just going to wait and see what happens with this trade. As I said before, we're already in at 1.1822. We're going to enter in slightly lower at 1.1725 if the price drops down. Now, if the price continues up, we're already in 1% at 1.1822. So we're going to keep this position active. However, to try and average and lower, bring in our buy price as low as possible, and knowing that there are going to be a lot of sell orders around this 1.1733 level, a lot of stop losses are going to be accumulating around here in the next 3 days, between Monday, which is today, and Thursday, which is the ECB interest rate. We have the US dollar Federal Reserve interest rate on Wednesday, and the Fed's expected to come out with a raise in rates. That should give us a nice move. Whether it goes up, we're still in for 1%, or if it goes down, we'll enter 1 more percent. And the key level that we're looking at is 1.1725 here. Okay. Thank you for watching our video. As I always say, this is not financial advice. Please make sure to go out and do your own analysis. And if you find that you're not experienced enough to do so, we would suggest going out and obtaining your own independent financial advisor. From all of us here at Signature FX, thank you for watching. Please make sure to follow us on social media. All of our links are in the description below in this video. And feel free to click on those links and follow us on Facebook, on Twitter, on Instagram. We'd be happy to have you as part of our network. And we're doing this for you, okay? We're trying to help you to be a better trader. And we're trying to help you to develop and hone your skills so that you can be the best trader that you can be. As I always say, have a wonderful week and happy trading.